All right. Good morning, everyone. Hopefully, everyone's having a great day so far. Very excited today to be kicking off Rogue Mornings. As everyone knows, V is currently on vacation this week. So I'm very excited to be joined today by the one, the only, probably one of the best minds in regards to the economy, everything that's going on, and the madness around the world. The Daily Economist, Ken Schortgen Jr. So, Ken, welcome to the show.
Good morning, CJ. And as I always say, if you can't dazzle them with brilliance, baffle them with everything else.
That's exactly right. Before we start the show again, just a quick reminder, if you have not done so already, please make sure to subscribe to our YouTube channel. Make sure that you share that with family, friends, in all of your social networks, Facebook, Twitter, Gab, anywhere that you may go. And then also just a quick thank you to our sponsors, myfreedomnow.us and also mygoldusb. So please visit their sites. They're both doing some amazing things, so take advantage of that. So, Ken, let's get started. We talked before we went live regarding the economy, regarding the Dow just now hitting the 22K. A lot of celebration and what they're kind of labeling the Trump economy. So, what say you?
Well, yeah, that's the whole thing's a misnomer. Right now, the fact of the matter is, since they've intervened in the market so much, the VIX is sitting at 8 or 9. There is no risk at all, and anybody who thinks that they want to go opposition in the market based on fundamentals, all that's happening is either the Fed or the Exchange Stabilization Fund are going in and buying the indexes, buying the yen. Not as much anymore. As you notice, the dollar is falling and the yen is rising, so the yen carry trade is going by the wayside, at least for the time being this period. But because of that, individuals, they still can't buy bonds. They still can't buy anything of that's going to provide a yield. So what does that leave? That leaves the stock market. Now, the interesting thing, however, is that while people are seeing the stock market go to these, new all-time highs, the fact of the matter is that in most indexes, only a few stocks are being purchased. As you may have heard of the Hindenburg omens, which is sort of an outlier, esoteric type of technical indicator. But yesterday it came out that there were more Hindenburg omen signals for the Dow within a 30-day period. There were 8 of them, which is the most since about October of 2000, which of course was the start of the fall of the dot-com crash. Now, for those who don't know what a Hindenburg omen means, it means that in the index, the price of the stocks in the index, or that index, is doing well, but momentum is slowing, i.e., we're not seeing much volume, and the majority of the stocks in that index are actually at 52-week lows. So in the case of NASDAQ, and you've got the FANG stocks, Facebook, Alphabet, Netflix, Google, which is Alphabet, et cetera, those are all-time, highs, and they're still screaming upwards because everybody's investing in it. But the other stocks within that index are sitting there right around 52-week lows. And what this means, of course, is that as we get towards October, and October is always significant because it's the end of the year, not only for the government, for a lot of companies with their annual budgets. They start their new year in October, but it's when mutual funds must reorganize, sell off their losers, buy stocks, because they're sending out their annual reports to individuals, and people want to take a look and see what their balances are, and of course what their holdings are. So you're going to see a lot of movement and volatility in October, and that's usually when the crashes can occur. If all the hedge funds and all of the investments and mutual funds are all in Amazon, Facebook, Netflix, which has been the case, what happens when just one of those institutions, like a hedge fund who's got 100,000 or even 1 million shares of of Amazon, what if they sell? And of course,
Right.
there's very little volume, and it's going to be a huge price dump. And then, of course, everybody else is the computer algorithms are going to jump on board because that's where the trend's going, and everybody else is going to be rushing for the door. And you can see, because of these artificially propped up very few stocks, if everybody starts reaching for the door at once, you can instantly see a 5, 10, 20, 30% fall in the markets because of the fact that there's no real buyers. The retail investor has not gotten back in. Everything's just being bought and sold between, the computer algos and the hedge funds. So this is where the whole thing's a misnomer. If you take a look at just before 2000, the October of 2000, September, October of 2008, and then going back to 1987, everything usually looks pretty fine during the summer, sell in May and go away, as they say. And then when everybody comes back, the sentiment in fall changes immensely as we head into October. So I take this all with a grain of salt. I'm more interested in seeing what's going on in the bond market. I'm seeing the dollar. There's a lot of talk, of course, about the weak dollar, which, when you take a look at, if the Fed is raising interest rates, how in the hell is the dollar going in the opposite of the trade?
Right.
Well,
Right. Hey, Ken, real
there's
quick,
a bit, yeah.
in regards to the markets, and in particular, the Fed easing their balance sheets. So I don't think we've talked since the Fed announced that, regards to, when they're easing their balance sheets. What is your forecast, or what do you see the markets doing with that? Is that going to drive the market down? Is it going to raise the market? What are your instincts telling you?
I honestly think that the Fed is done with raising rates. They discovered that they have screwed up especially the bond market so badly that when they raised interest rates, it should have raised interest rates on the debt, the treasuries. It didn't. They've been working the opposite. And there's an interesting thing going. Like I mentioned, the yen carry trade is what the Fed and the ESFS, or Exchange Stabilization Fund, ESF, the Treasury uses to manipulate the markets, as well as the bond markets. What has happened is that the yen, because it's gotten out of control and the dollar is starting to fall, the yen carry trade isn't working as well as it used to. And what I mean about the yen carry trade, that's where they would take dollars, strong dollars, to buy weak yen, and then use that yen to buy assets, so you could accumulate more. And that's how they used to control the markets. But in this case, what is happening is, every time that U.S. Treasuries are slowly going up in when their interest rates are rising and the yield is getting higher, foreigners seem to be coming in and buying them instantly, en masse, driving down the interest rates and keeping the interest rates low. This is really making it so that what the Fed is doing by raising the Fed discount window or rate, what banks borrow from the Fed, the cost of borrowing money, by getting rid of, or by these foreigners coming in and driving down interest rates on the treasuries for the debt instruments for the rest of us, that is really working in opposition to what the Fed's doing. So the Fed I think, has gotten to the realization that they no longer have control over interest rates, that the invisible hand of the market is moving in, and the foreigners are almost using the treasury the same way the big banks use the yen for this carry trade. Now, what's that going to mean for the future? If foreigners, besides sovereigns, have been accumulating a lot of treasuries and bonds, when the Fed starts to implement its tightening, because I think that's going to happen. If you take a look at all the hard data across the board, unemployment, CPI, manufacturing, we are in a recession again. Period. I don't want to hear this, the fake numbers. We are in a recession. The other thing about it is I'm fearing with the stock markets that the reason we're at 22,000 and the reason we've jumped so high so fast since Trump got in is we're starting to see the effects of high inflation. If you take a look at Zimbabwe, Venezuela, Argentina, whenever they were having a currency crisis, their stock markets were the highest in the continent. Okay. The Zimbabwe stock market was at well over 20,000, which was the highest in Africa, while their currency was, 1 trillion Zimbabwe dollars to the dollar. Why? Because if you can't buy tangible goods and you can't afford to buy tangible goods, then you might as well just put your money in the stock markets. And that's what drives it up, high inflation or hyperinflation. You always see that across the board. There's no other assets to buy, etc. Now,
Ken, you nailed it. You nailed it. And I don't want to break your momentum going, and we've actually heard now, former Fed chair, I believe, Alan Greenspan, actually warn about stagflation, warn about what he sees around the corner.
We've been in stagflation. That's something else the Fed can't do. I've reinforced this because I went back and looked at the late 70s, early 80s. In 1978, Paul Volcker was the head of the New York Fed. He wasn't the head of the entire Fed. He was head of the New York Fed under Carter. He had interest rates at 7.5% in 78. And inflation was raging at about 13%. So he got confirmation from the Carter administration to go ahead and raise rates. He raised them in 79. He raised them to 9.5%. And guess what? Inflation didn't budge. It was still at 13%. So they had to eventually, between 1979 and 1980, when he took over the entire Fed, they ended up raising interest rates to 21% before they finally stopped rising inflation. It took taking the interest rates to 21%. But guess back then? The national debt was only $500 billion. That's all the national debt was at the time. So now, of course, we have rising inflation, about 8 to 10% in the general economy. And I'm using 1980 numbers like John Williams over Shadow Stats does. That's what you have to do, apples to apples. Volcker was dealing with 1980s reporting numbers. They've changed the reports and the models with so many fake variables that what's coming out isn't real. And they're doing this for political reasons to make everything look better. And the computer algorithms are based on these false reports that come out, and they have, of course, unlimited funds to be able to manipulate markets either way. With that being said, the inflation is rising about 8 to 10% per year. Then we have interest rates at all-time lows. Think about it. The Fed has raised interest rates 4 times, and we're just barely over 1%. Volcker had to go to 21% to stop stagflation. Fed can't do it. We have such a high debt now, the national debt. For every 1% they raise interest rates, it's an extra $250 billion from the federal budget to pay just on interest. So if we went up to even Greenspan's 4.5% interest rates before the 2008 collapse in Bernanke started lowering them down to 0, we were at 4.5%. If we did that again, that'd be an extra $1 trillion in our $3.8 trillion budget, just going to interest on to roll over $20 trillion of debt. So they're
Ken,
SOL.
with a
they're
weak,
SOL.
Yeah. So with inflation that you just mentioned and a weakening dollar, what does that do to the American consumer?
Well, because we don't have a strong dollar, the dollar weakening, it means that our exports, which we have nothing, what are we exporting? We're trying to export energy. Okay, that doesn't help most of the people in the United States. It helps the frackers, but it's really not helping anything else. But what it's going to do is it's going to raise the cost of imports from China, from India, from Mexico, etc. Well, those are the things everybody needs it for necessities. Something like 1/3 of our food is actually coming from China. we take our raw food that's cultivated, we send it over to China. They process it into the packaged food that we have here, and then it's shipped back. So we don't even have very many food processors anymore. Even the Kellogg's and the other ones that used to be in Battle Creek, Michigan, those are all going by the wayside. So
But Ken, we can sell American beef to China now.
I don't know. Japan put the kibosh on that.
I saw that. Well, they put a tariff on it, right?
They put a tariff on that. So this, that's one of the things we can get to in a little while is thanks to Congress and their neocon ploy with the new Russian sanctions, the trade war that's about to commence is going to be just like the 1920s. It's going to be the equivalent of the tariff. I forget it's too early in the morning. I forget the tariff that was
No.
implemented in the 20s that really led to the Great Depression and the fall of sovereign governments in Europe. But Russia and China are now prepared to bring about a massive trade war against the United States, and with the U.S. not having any ammunition to battle against it, this could be the turning point to bring about the new financial system.
Exactly. And before we go into more detail, because I think that impacts a lot of things, we've talked about the U.S. economy, we've talked about our markets, and then we witnessed what's going on in the EU. Do you want to break that down for us?
Yeah, the EU is in desperate times. I have no idea what the whole thing behind this influx of migration is. It's for sovereign governments to give up their control to whatever plan out of Brussels, planned by the elites, or plans by Soros. The fact of the matter is that since the 2008 financial crisis, only one nation has really prospered, and that's Germany. Because Germany already had the production and infrastructures. Hang on a second, I use my cough button.
No, that's perfectly fine.
Okay. Yeah, they only had the infrastructure and the production, plus they had the trade agreements with Russia, China, and a few others. So they've got their businesses that are gearing out. But the ECB and all of their bond buying and all of their stimulus and quantitative easing type things, it has done nothing, zero, to help not only the Southern European countries, but also the ancillary EU countries. Now, what do I mean by ancillary? Ancillary are the ones who don't use the euro as their primary currency. They have ties into some of the trade agreements, but they don't receive all the benefits of being a full EU member. Those would be Turkey, Hungary, Czechoslovakia, Poland, etc. Those are the ancillary. Well, now, because they're not full-fledged members, out of Brussels, they're still trying to force all of these Islamic refugees into these ancillary countries, as well as Italy, Greece, etc. Well, because of this, there's becoming a backlash, and the backlash now could become so great that it could be the catalyst that allows a few of these countries, not just the ancillary. Look, we've already seen Turkey remove itself and choose a side away from NATO. They're more into the Russian and Eurasian camp now. We have Poland. We have Hungary, which has already put up a fence, not allowing any more refugees in. Italy, it was ironic because after Matteo Renzi tried his referendum, his gambit, and failed, he resigned from office, and there still hasn't been a real prime minister filling the spot. They have been pushing off elections because the parliament is just a bunch of paid globalist tools. But the fact of the matter is that with all of this, with the failure of some of their banks in recent days, as well as this influx of Islamic migrants, or really, I don't want to call them migrants because that's not really what they are. It's an influx of jihadists in there to try to change and destroy the ancient European culture. With all those coming in and the EU not standing in support of the individual sovereign nations, the parliament has finally had enough, and they are now listening to Beppe Grillo and his five-star movement, and they are discussing both the combination of leaving the euro or leaving the EU itself. Greece is at a point that I don't think Cyprus is going to win the next election. Spain is, of course, still hovering on secession by Catalonia. Poland, Hungary have already been given ultimatums by Brussels that they need to take in more refugees or they're going to face the consequences. And now the big thing is that the bureaucrats at the ECB are threatening EU countries. They're finding scapegoats. And here's the interesting thing. They're threatening large fines on EU countries that fail to adopt, get this, the bloc's economic reform recommendations. This is not a policy set in stone. These are just recommendations by the ECB that if they don't follow, they're going to get major fines. Now, how much power does the ECB have? Obviously. In this report, the things that they're trying to do is they're trying to force countries like France, Croatia, Italy, Cyprus, Portugal, and Bulgaria for what they claim are excessive balances, as well as high account deficits, i.e. trade deficits, unsustainable debt levels, and housing price bubbles. Now, if everybody's using the euro, then how can these countries control a housing bubble if all of the policy is coming from the ECB? So this is the EU not just scapegoating every country for the ECB's failed policies, but they're also then trying to force every one of these countries into imposing austerity on their people. And when we talk about austerity, what we're doing is we're cutting pensions, we're cutting employment by the public in the public sector. We're talking about doing things to stem and stop economic growth. Well, how can they pay off their debts if you're trying to stem economic growth? You see how this whole thing is absolutely, it's not just confusing, it's chaotic. And that's what they're trying to do.
Stupidity, pure stupidity.
They want to now remove, they want to make the situation so bad in Europe that the sovereign governments no longer have any power and Brussels can take over. This is their reaction to the populism that's rising all over Europe. So this is their last bastion. The EU, and what is really fascinating is with the euro suddenly about to hit 120. I mean, that sucker, last year they were believing that the euro was going to hit parity with the dollar. Now it's up to 120 as the dollar has fallen 9% since the beginning of the year. So this is making imports coming into Europe much more expensive. Or, I'm sorry, their exports out much more expensive, which means that fewer and fewer countries are able to afford to buy them. So this is going to drive their economy down even more. If you remember, even V's talked about this, and I've written upon it going back to 2011. The world has been in a currency war. Everybody's rushing to devalue their currency, the rush to the bottom. Well, the euro,
right.
This big move in the stock market in Europe, ever since November, everybody's pretty much been in it since the Trump election. That has been primarily because the euro has been down and weak. Now the euro is getting extremely strong, and they're not able to export what they were, both because of the sanctions, but because now it's too high price. This is another reason why the auto industry all across the world is dying. Nobody can afford it. And there's an interesting study that came out recently. If you take in the United States the national debt from the government plus the debt that is held by you, me, and Joe Six-Pack next door, consumers, we're leaving out corporate debt, but just consumer debt plus national debt is $41 trillion. Our GDP is 18.75 trillion. So that means that the debt to GDP ratio in the United States is 2.25 to 1. Is
Amazing.
it any wonder that consumers can't buy anything anymore? Why we have all of these retailers filing for Chapter 11 bankruptcy? And Amazon is really a false hope that they put out there. Amazon has a P/E ratio of 198, and yet they only have revenues, after tax revenues of $4 billion per quarter. Okay, $4 billion per quarter. You know what per annum. Last year they made total of $4 billion profit. Apple made $52 billion profit, and yet their stock price is around 150, 170, and their P/E ratio is 17 to 1 or 17. So why is everybody getting into Amazon? Well, it's a risk commodity. Risk is off in the stock markets, and so everybody feels that it's going to be the next big thing. Well, for those who don't understand P/E ratios, what that's saying is at 198, it means that the cost of the stock is the equivalent of buying earnings for the next 198 years. Yeah, I don't think Amazon's going to be even around for the next 50 years, much less that. So who knows?
Yeah, just amazing. And just to think, like the EU, the mixed messaging that they're sending. Okay, so austerity on your people, yet we need you to bring in all these migrants, and if you don't, we're going to put sanctions on you. I mean, they might as well be taking a page out of the Congress and the Senate, Ken, with these new sanctions that are going to usher in a trade war, and that's what we're witnessing right now.
Yeah, and speaking of the trade war, we know Germany, Merkel. Merkel has not liked Trump from day one. Obviously, he shunned her with that handshake when they first met, when he first got in office. And then at the G20, Merkel was definitely not on the side, because Merkel is, going back to what Merkel was. Merkel was a socialist, aka communist, in East Germany before they got together after the Berlin Wall fell, and now she's just one big oligarchical fascist, and she is a globalist to the core. So, it's not some counts her and think she's a paid tool. But with that being said, Germany at least has productivity. The United States does not. And so with these new sanctions that Congress just passed, Germany is ready to impose their own sanctions to just ignore the sanctions by the U.S. And that's going to bring, if Germany decides that they're going to ignore the unilateral sanctions that the U.S. is now imposing on Russia, affecting their ability to be part of the pipelines that are being created in the Turk Stream and the Nord Stream, this is going to bring about an interesting thing, because there's only one single thing the U.S. can do. They can threaten sanctions on Germany for not being allowed to use SWIFT, i.e. the inability to buy dollars. Well, that, of course, now is going to trigger Germany to say, give them the middle finger, and then start transacting in yuan, RMB. So the U.S., if they try this, is going to cut their own throats. They've just cut their own throats with going after China over Korea. I think really in the long run, the only reason that Trump are actually the deep state and the neocons are so desperate for war, because they know the jig is up. It's over. And we're going to get into what the new China, Saudi Arabian Aramco is going to get here in a few minutes. But the fact of the matter is that we sent all of our production over to China, and now we have the audacity to blame China when they have cheap prices. Think about that. We did it to ourselves.
That's what we do, Ken. That's what we do.
Yeah, so now that's why they're doing war. They're trying to create a war. They lost in Syria. They lost the high ground in that. Saudi Arabia, we can't even support Saudi Arabia in their attempts to go after Qatar. Why? Because we've got our foot in Qatar. We can't go after Iran. Why? Because Russia's been protecting them. Also, the loss of Turkey in NATO is going to hurt Washington immensely. because a lot of what the CIA has been doing, trying to back ISIS and back the quote unquote moderate Syrian rebels, their mercenary force, jihadists, Turkey can very easily, destroy them if they want to. They can say they're going after the Kurds in Syria and instead just bomb the hell out of these local groups. So, um, Turkey has always been a linchpin when it comes to Russian-U.S. relations. As a matter of fact, for those who don't remember, the Cuban Missile Crisis, when it finally came to an end, there was some deep agreements that were made between Kennedy and Khrushchev, one of them being that Russia would pull out of Cuba with its putting missiles, but we would also pull our missiles off the border of Turkey, aimed at the Soviet Union. So Turkey has always been the linchpin between the two entities. And with Turkey now moving into the Soviet camp, or I should say the Russian camp this time, this is going to end potentially any NATO movement. And then with the EU pulling its shenanigans against the ancillary countries like Czechoslovakia, Poland, and Hungary, those NATO nations are going to be less amenable to allow the United States and or NATO to put in their military might sitting on the frontier of Russia. As a matter of fact, how quickly will they move into Russia's camp? So everything is changing, and the United States is doing everything wrong because we can't get rid of our old Cold War mentality congressmen. We can't get rid of the State Department, which is infiltrated with a bunch of intellectual wonks who have never held a real job in their life, and they're easily paid tools of the NGOs and of the elites. This is why Trump was really destined to fail, because getting rid of the people on the surface, getting rid of the Brennans, getting rid of the Comeys. This bureaucracy goes 4 or 5 levels deep. And all you need is one simple thing. This is something that was interesting. There was, I don't know if it was Scaramucci or if it was somebody new who was talking to some interns, some White House interns. And the information about that meeting was leaked out almost immediately. This means that the interns are already bought and paid for. If the interns who just came out of college and are moving in there, but they've already been co-opted by the deep state before they even get to the White House, that tells you that this deep state goes into the universities. It goes into a lot of these NGOs and the Republican camps and these things like that. So this whole corruption is really, it's what I say about Latin America. Latin America isn't just a matter of where the government's corrupt or the military is corrupt or the police is corrupt. The corruption is institutional all the way through the entire culture. This is why you have to change the entire mentality, usually through something like a populist movement, or, you hate to say it, a revolution. And it's coming to that head with even the liberals and the Antifas wanting to do violent revolution. This is a return to 1968. And I think this is only going to get worse as we go into 2018.
Yeah, we're witnessing all these failed policies. The day after the new sanctions were announced against Russia, what did they do? They signed a $2.5 billion deal with Iran. So these policies that are the efforts of Washington, D.C., the deep state to isolate Russia are completely backfiring. The United States is the country that's being isolated right now. We're witnessing across the globe all these pivots to the new BRICS, the Eurasian Trade Zone, these massive deals that are being launched. And what could potentially be the nail in the coffin, Ken, is specifically the Saudi and China energy deal that potentially could be happening. What are your thoughts on that?
Yeah, this is something good to end the podcast on. Now, Saudi Arabia, they're losing a lot of market share when it comes to energy, and this is one of the reasons why they're going into war. V's talked about it. the Russian analyst has talked about it. W's talked about it. This is what the Yemen war was all about. This is this move on Qatar. Saudi Arabia, which has long been the authority over OPEC and over the Middle Eastern oil nations, energy nations, is going by the wayside because not only are they hemorrhaging money, but their own reserves are pretty much tapped out. So this, of course, what they're trying to do is diversify into something else. So they're setting their national energy conglomerate, Aramco. They're wanting to go public to get this new influx of capital to see about transitioning out to a new type of industry or economy. Well, with that being the case, the thing is that the Wall Street has already determined that what the Saudis want for the IPO is about 5 times more than what the value of the Aramco and their reserves are actually worth. So,
bingo.
To demand a price much greater than the value of the company. Well, guess what?
Lost your audio there for a second, Ken.
Can afford? Oh, are you there?
Hey, yeah. Back up about 5 seconds. I dropped you for a second.
Since Wall Street has determined that the Aramco, what Saudi Arabia is demanding for Aramco is more than the value of what they have, what country out there could actually afford to overpay because it's more of a geopolitical move than it is necessarily an economic or financial move? And that's, of course, is China. Now, here's what has come out of an article recently. The Chinese would be in position to demand that oil sales to China be paid in the yuan currency in RMB terms. The Aramco investment, large or small, would serve as leverage to fracture the petrodollar at its home base within Saudi Arabia. So when this Aramco deal, Wall Street doesn't want to overpay, and they say that what the Saudis are asking is about 5 times more than what the company is worth, but China is willing to overpay, maybe not the full price, but much more to get that stake in Aramco. And once they get their stake in Aramco, guess what? Saudi Arabia is OPEC. They're the authority over OPEC. Saudi Arabia already has China already has its hooks in Qatar. Qatar is integrating the yuan into their monetary system. They've already got $90 billion worth of RMB in their economy. Iran is already in Russia's camp. Russia and China are already locked in the thing. So you can see what I'm saying about this is that the Aramco sale, if the Chinese get the stake in it, this is going to be the final death blow to the petrodollar, because Saudis then choice but to sell oil and energy in Chinese yuan, and because the Chinese owe the company, if the U.S. tried to go after Saudi Arabia, what they're really doing is they're going after China, and the real war begins.
Wow.
So it's Aramco that's going to be the linchpin to bring about the end of the petrodollar, the creation of the RMB yuan, and once they have their hooks in there, guess what? We have now the gold-backed trade system and the gold-backed energy. And this is why Russia and China have been accumulating so much gold, is because they're going to back the energy trade in gold. That's where they're going to use it to start, because if you really look at it from an absolute point of view, the dollar is not the reserve currency. Oil and natural gas are the reserve currency. They're the lifeblood of every single industry, every single agricultural endeavor. Everything is about energy. Energy is the lifeblood. And this is why the technocrats, the Brzezinskis in the 1970s, the reserve currency, the dollar to oil, the petrodollar. They did that because this is what they want to believe. Energy, units of energy are what money is, rather than gold. And that's why they've dissuaded gold for all this time. But the fact of the matter is that energy is like entropy. It's something that gets used. If it's produced, but it's a finite resource. And until they find something new, this is why they're trying to transition This is why the elites are trying to transition from the petrodollar into the carbon credits. It's like the ultimate use of energy as money. But on the flip side,
Ken, a
this is,
couple comments,
yeah,
couple comments real quick, and you've nailed it. So obviously the Saudis are going broke. They're now offering basically what they're wanting to do, an IPO for their oil industry, Aramco, and these are some hard numbers. So they estimated the worth at on this IPO. However, the US based analysts who went in, the underwriting brokerage houses have came back and said, we think it's $500 billion, which is 4 times less than the Saudis think. Think about that. That's amazing. But here's my question to you in regards to this. Will China tolerate the continued behavior of the Saudis that the US allows them to do? And what I'm specifically talking about is the humanitarian crisis in Yemen. I don't know why that's not blasted in the MSM. It's not regarding what exactly is happening in Yemen and Qatar. Will the Chinese tolerate that Saudi behavior?
I think the Chinese won't care. The Chinese and the Russians, if you noticed, have not imposed social or political changes on any nation that they go in. If you notice that Putin has not demanded that Assad change his ways or leave office. Same with Iran. Okay. China and Russia really don't care about what a sovereign country does within its borders. They only care if that sovereign country affects one of their allied states. Well, guess what? China and Russia, they have nothing to do with Yemen. They don't have trade agreements. They don't have military bases. They don't have really oil agreements. They could care less. So it's a moot point on that case.
Okay. So in the event we see a shift completely away from petrodollar, completely new, gold-backed energy exchange method, then what does that do for the dollar? What does that do for U.S. consumers in terms of purchasing goods from overseas?
Well, it's going to be a great question because either the dollar is going to collapse completely, it's not going to be accepted. It's going to go hyperinflation because hyperinflation in the currency is a confidence issue. It's not really anything else. So it's going to be confidence issue. The world's not going to accept the dollars. The world's not going to accept the treasuries. They're going to get dumped back. And the United States is pretty much going to instantly fall into a third world state. So they're going to have to either find a cache of gold to back the dollar to be able to function in this new system, or they're going to become isolated and have to go back to a self-sustaining economy, which of course will take a few years. And in the meantime, the amount of civil war and revolution that would take place in the United States, where they can't afford the welfare system, they can't, the whole rigmarole of production is going to cause untold chaos until they're able to ramp up that system. That's where the whole question is really been. Why has the U.S. not been willing to work with these other up and coming superpowers to bring about a new financial system? Well, the vast majority, it all comes down to the fact that the vast majority of people in power are psychopaths or sociopaths or psychopaths, and they have no concept or thought about how their policies affect human lives or other Americans.
Mm-hmm.
Get away with following the old Cold War Wolfowitz doctrine, as Paul Craig Roberts talks about, or their inane attempts to keep war going on rather than diplomatic means to bring about trade. We're trying to force trade embargoes and trade wars against China and Russia, when the fact of the matter is the only reason that their currencies are being devalued is because we are screwing with the dollar. Everything goes, all of these other countries, their currencies are tied to the dollar. It's not that they're doing this on purpose. They're doing it because every time the Fed lowered rates down to zero, it made China's currency so strong that it was affecting their own economy. So they had to devalue their currency just so they could keep their own economy sustained. Why? Because their currency is tied to the dollar. Everything that we see going on right now is because of the Fed, their failed policies, and the final attempts by the federal government to keep dollar hegemony as a unipolar reserve currency. That's all it's been about. It's the same way in Rome. It's the same way with any empire who's not been willing to transition and give up authority and power, but instead do anything in their means, including war and destruction of their own empire, just to keep somebody else from getting a little bit of the power.
Oh yeah, absolutely, absolutely. Very good stuff, Ken. So do me a favor if you can. Rogue Money is very fortunate to have you as a contributor. I love your work, and I'm not just saying that because you're. I mean, I listen to your shows. I read your articles that you post. So why don't you share with our listeners about where you write, where you contribute, so that way they can make sure to follow your work.
Yeah, I contribute to roguemoney.net, obviously. My own website is thedailyeconomist.com, and that's a great one-stop shop because it RSSs in my Rogue Money articles as well as the articles I write for other sites. Also, you can go out to YouTube to just put in a search for my name, Ken Schortgen, or the Daily Economist, and you'll pop up my YouTube channel. Go ahead and subscribe. I do a podcast usually on Mondays, Wednesdays, and Saturdays. And other than that, I'm just part of the crew.
All right. Well, excellent. Well, Ken, thank you so much for being here today. For our listeners as well, thank you for all tuning in. We will be back at 12 noon today, Eastern Standard Time, with Hanging with Harley. So we're very excited to see what is on Harley's agenda for today. So stay tuned. Come back at noon, and want to thank again for listening in. Make sure again to subscribe to our YouTube channel. Share it so that we can continue growing. And again, appreciate all of our listeners and supporters. Take care. Bye-bye.